Well, yesterday the Federal Reserve said the U.S. economy continues to improve. Well, today it announced, along with the Treasury, that it is scaling back emergency programs used to fight the financial crisis. What does this mean for the U.S. dollar, and can we expect any impact on the greenback and other currencies out of the G20 meeting underway right now in Pittsburgh? Joining us with his outlook is Robert Sinche, independent strategist, formerly the chief currency strategist at Bank of America. Welcome.
Good to be here.
So let's start with the G20. What effect could it have on the dollar?
Well, I don't think that the G20 really has currencies as a primary focus right now. I mean, there are so many issues, big issues they're dealing with in terms of regulatory policy, bank capital, et cetera. And I think even more important than that is it's hard to find any country which is really upset right now about its level of exchange rate. So nobody's really going to come in there with an axe to grind on currencies, I think, into these meetings. So
if most people aren't expecting anything strong to come out of the G20 on the dollar, do dollar traders have anything to worry about?
Well, I think what they have to worry about is something that was discussed, here earlier today, and that is that everybody's been on one side of the market. Everybody's been very short of dollars for a host of reasons, a host of very good reasons. And when markets tend to get one-sided like that, there probably is some risk that they could bounce the other way, and I think we're seeing that now in the last couple of days.
So what are your thoughts on a weak dollar? Is it in the U.S. best interest, especially by way of our exporting sector?
You know, in a narrow sense, there are certain industries that benefit from a weaker dollar. There are a lot of industries that'll be hurt by a weaker dollar. I think it was BOJ Governor Hayami about 10 or 15 years ago when they were talking about potentially weakening the yen. He said, I've never seen a country devalue itself into prosperity.
Is that what we're doing?
Well, I don't think we're intentionally doing that. And the movements of currency so far have been within the range of acceptable movements. But I don't think that, weak currencies are a reflection of weak returns on capital, weak growth, weak opportunities within an economy. So to the extent that a weak currency reflects weakness in the economy and fundamentals, weak currency is not a good thing. It's much better when you have a strong currency and strong fundamentals.
So what will boost the dollar? Is it going to come down to the Fed tightening interest rates? But then you have to add the question of, will the Fed be the first of the global central banks to do that?
I think there are a host of concerns out there about the dollar now. Has the Fed been too expansionary and created too many dollars in the world marketplace? Are we creating too many budget deficits and creating a burden on the economy for the future that won't be met? Are we going to put on too many regulations on the economy and reduce the rate of return on U.S. assets going forward? So all these are issues, and you don't see them being solved very, very quickly. So the one that might be focused on most quickly, I think, is the monetary side. When will the Fed begin to wind down this creation of dollars and restrict the supply of dollars, which should push its price up on world markets?
So what do you think of this idea of doing these reverse repos? By the Fed, they're kind of talking about it right now as sort of a way to mop up some of this excess liquidity.
The Fed's in a very tough spot. I think that's certainly logistically a way that they can implement a removal of some of this excess liquidity. The question is timing. When is it best to do that? When is the economy on stable enough ground that they can begin to withdraw liquidity and not run the risks of a relapse in the economy? And I think Bernanke, a student of the Depression, very much focused on sort of what happened in the latter 1930s when the Fed might have been a little bit too early to withdraw liquidity and the economy went back into a very painful recession again. So, on one hand, you've got people saying the economy's still too weak, don't withdraw liquidity. On the other hand, a number of the monetarists are saying we've created a huge amount of liquidity in dollars in the system. That's inflationary. So it's a very tough judgment. But logistically, reverse repo is a very good way to begin to get some of that excess liquidity out. That's the easy part of the equation. The hard part is, when do you start doing it?
Well, we'll have to keep our ears open for that. In the meantime, as our time together winds down, Robert, I'm curious to get back to the budget deficit and how good, this is a very simple way of putting the question, but again, short on time, how good for our debt are we going to be, decades down the road with the talk of the record budget deficit?
I think that's a lot of the uncertainty is, are we creating too much debt? Can you pay off these debts? If the U.S. was an emerging market country, we know that there'd be a crisis going on right now, crisis of confidence in the currency. Since it's the world's reserve currency, it gets a little bit more leeway. But I think that that's one thing that long-term investors are looking at. Do we, after this big stimulus package, get back to much more stable long-term budget fundamentals? And I think that's a big issue facing the administration going forward.
And we actually have a couple of seconds. So China, yuan, pushing, this has been a long story, right? Getting the yuan to come up in value a little bit. Is that going to have an impact on the dollar?
Well, what's amazing amazing, actually, is that Chinese currency has been virtually stable against the dollar at a time when the dollar has fallen versus almost all other currencies in the world. So you say to yourself, well, how come the Chinese currency hasn't adjusted with these others?
A good question to leave it on. Robert Sinche, many thanks.
My
and we'll be
pleasure.
back.